Hello, I'm Tim Dodge, and I'm here to talk to you today about the Terrorism Risk Insurance Act, also known as TRIA. Now, as many of you may know, the United States Senate adjourned for the year on Tuesday, December 16th, without having acted on an extension of TRIA. What this means is that the Terrorism Risk Insurance Program, which has been in effect since 2003, will expire on December 31st, and the federal government will no longer be providing reinsurance for terrorism losses. I want to talk to you today about what that means for you and for your clients. First thing I want to talk about is policies that use ISO forms. Now, in New York, there are two ISO terrorism insurance related endorsements that are approved for use. One provides a cap on terrorism losses in compliance with the terms of TRIA, and the other one is an exclusion, which would be attached to policies where clients have rejected the terrorism coverage altogether. So those are the only two ISO endorsements approved for use in New York. There may be other carrier proprietary endorsements that have received approval from the New York State Department of Financial Services, but I don't have easy access to those records, so it's kind of hard for me to know for sure. Now, those two ISO endorsements, neither one of them address what happens when TRIA expires. So by implication, really by omission, this means that your clients in New York with those ISO endorsements on their policies will continue to have coverage for terrorism-related incidents. Now, that is for admitted policies only, and it doesn't address carrier proprietary forms. So again, you are going to need to check your policies of your clients who have terrorism coverage to see, do they have ISO forms on there, and if they don't, what do the carrier proprietary endorsements say? Now, with regard to non-admitted policies in New York, they don't have to file their form, so they could be using terrorism exclusions or endorsements that automatically drop terrorism coverage if TRIA expires. So if you have any non-admitted policies that are providing terrorism coverage for your clients, you're going to need to take a look at those. They're going to probably vary from one carrier to another, so you want to review those and see exactly what it means for your clients come January 1st when the Terrorism Risk Insurance Program is no longer there. The other thing I want to talk about is our neighboring states of Connecticut, Massachusetts, New Jersey, Pennsylvania, and Vermont, because there are a whole bunch of other ISO endorsements that are not approved in New York, but they're approved in all those other states. And three of them are actually have titles like conditional exclusion or conditional limitation, which basically mean that if TRIA expires, coverage either ceases automatically or ceases significantly. Now, the way they are worded, it excludes losses for terrorist incidents that cause total insured damage of $25 million or more. So if you had a relatively small terrorist incident, likely those ISO endorsements would still provide coverage. But because carriers have more flexibility outside of New York, if you have accounts on the other side of the state line in any of those jurisdictions, you want to take a look at those policies and see what exactly is going to happen come January 1st when TRIA goes away. Now, another protection in New York law is that New York Insurance Law Section 3426 prohibits insurers from midterm significantly reducing coverage, adding an exclusion, canceling midterm for anything other than specified reasons like non-payment or fraud or material increase in hazard and those kinds of things. So I don't think in New York we have to worry about carriers canceling policies or slapping exclusions on midterm. Now, that could happen at renewal time, and if carriers don't have the ability to put terrorism exclusions or limitations on, then it's likely that carriers are either going to non-renew some policies in areas that they think are vulnerable to terrorist incidents or impose pretty significant premium hikes. So that's something to be watching for. And of course, non-admitted carriers don't have to file their rates or their forms, so you could see the addition of new exclusions at renewal time or midterm, or you could see big premium hikes at renewal time. It's really it's hard to say exactly what's going to happen with the non-admitted marketplace. The other thing I want to point out is that I don't know what the laws are in other states. I know what New York law says, but the laws in those 5 states I mentioned before, they could vary. They may permit insurers to impose midterm premium coverage reductions, adding new exclusions, that kind of thing. So probably the best thing to do there is to review the state amendatory endorsements on those policies and see exactly what insurers are allowed to do. Those state amendatory endorsements, the whole purpose of those endorsements is to make the policy comply with state law. Every state has them, New York, all the other states have them. So review those endorsements. It will tell you what the insurer is and is not allowed to do. Take a look at those. Bottom line, what you need to know, New York commercial lines clients who have admitted coverage, they have ISO forms, their terrorism coverage is intact, at least until renewal time. If they have non-admitted policies, that coverage could be significantly reduced or go away entirely automatically on January 1st. You need to review the terms of those policies. Be aware that non-renewals and or significant premium hikes are a real possibility for those risks who are located in areas perceived to be vulnerable to terrorist incidents. I'm thinking specifically of anything from Midtown South in Manhattan and some other areas of the state that might be attractive to terrorists. I mean, it's hard to know exactly what might be attractive to terrorists, but certainly large shopping malls, large sports stadiums, concert venues, things like that is a consideration. Clients in neighboring states, it's possible that their coverage may automatically be significantly reduced or go away entirely on January 1st. Review those policy forms and find out what the state status is in those particular states. So if you write some risks in Pennsylvania or you have some accounts in Connecticut, you need to know what those policies say and be prepared for it. I would suggest that if you have clients in the neighboring states at least, who may be looking at immediate reductions, and if you have non-admitted clients in New York who may be looking at immediate action, I would suggest you get in touch with them as soon as you possibly can. Just invite them to talk to you about what the coverage options are. Let them know that the program has expired and say, we need to talk about what to do next, and invite them to have that conversation with you. I think you need to have that same conversation with your New York clients, but that can probably wait until renewal time. If carriers want to non-renew an account or put on a new exclusion or something like that, under New York law, they've got to provide a minimum of 60 days notice, which means the soonest something like that could take effect would be mid-February. So you've got a little more time with at least your admitted clients in New York. As I said, my frame of reference here is ISO forms. There may be some carrier proprietary forms that have more restrictive terms that may have gotten approval from the DFS. I've heard anecdotally that some forms are out there like that, but I haven't been able to confirm that. So you really should review your clients' policies if you know that they have terrorism coverage to find out what they're at, and then give your clients a call or an email or something, letting them know what the score is here and inviting them to talk to you about what they should do next to make sure that they are sufficiently covered. Last thing I want to say is that all this could change after the first of the year. When the Senate adjourned Tuesday night, that was the end of the current Congress. We had an election in November. We're going to have a brand new Congress seated in the first week of January with a lot of the same people returning, but it is a new Congress. That means new bill numbers, everything needs to be reintroduced and all that sort of thing. But it is possible that the new Congress could decide to retroactively extend TRIA. They could decide at the end of January that TRIA exists all the way back to January 1st. Congress can do that. And to be honest, there seems to be a lot of outcry about the expiration of TRIA, so it wouldn't surprise me altogether if Congress decided to do that. So, more developments may come. For right now, though, operate under the assumption that TRIA is going away and that you need to talk to your clients who either have terrorism coverage or who need it about what's going on and what they should do to protect themselves. Thank you for watching. If you have any other questions, please visit the IABNY website, www.iabny.org. You can email me at tdodge@iabny.org or give me a call at 800-851-8853, extension 229, and we'll be in touch as soon as we learn anything new. Thank you again.